Right, hey everyone, just a quick little video. I wanted to show you guys this little Apple trade that we took, well, I took. In particular, there are a couple things that I like to look at in general. We've already identified the higher time frame wave structure on Apple, and we're in this longer time frame wave 3, right? We don't know as far as like off of these lows after the earnings. We don't know like where in the wave 3 we are, so we could be very early on the wave 3 for Apple's bullish structure. We could be in the middle of it or in the end of it, but generally, wave 3 is the longest and strongest wave. On the daily, I was looking at this, high, low, and come back to high, and then lower low as a potential zigzag ABC pattern. So if I were to draw it out, it would look something like there's a simple A, B, C, and then in that, there's something that we do know, which is the fib extensions. So you do that same thing with the fibs. 786 is typical profit take area, right? We have this consolidation here as well in the range. If I draw it out, you can see it here. You kind of have these wicks and this consolidation. If we back test there, you can see it more clearly there. What I will say is this. I'm just pretty much looking to like under 786, like you can go for the extensions and whatnot, but we know 786 is a profit target for a trend-based fib, right? One ratio being another profit target, so both of those in line. And then if I just draw like a regular fib retracement off of this move, just looking for confluence. Not much there, but we do have this key area 21340. I'm gonna mark that out for you guys. I just want to show you how easy this is. And then we're just gonna delete these two. And delete these two. Awesome. Okay, so this is the key level. We have our fibs. Honestly, over 210, there wasn't much else besides our longer time frame fib 219, which is my previous high, and here. But on the 30-minute, this is how I'd be drawing the inefficiencies. So I'm actually gonna just ignore this for now. Just remember this was the area of the demand retest, whatever. But in the context of the zigzag, we have this previous high, and what I look at is intraday. Like when were the days there were spots where things like didn't get back tested? Okay, you have this 30-minute candle, and it came down. They had a big candle, and then in between didn't get retested until later on. Not even later on in the session. This didn't get retested. So let me just show you an example. That's how I would do it intraday, right? Okay. Now, when I'm looking at this consolidation, we know that there's empty space below us, but if you're thinking, okay, this isn't strong wave 3, like, and it's gonna go higher, essentially, like, we kind of know it's gonna take out these highs. It's kind of like a given. We have this key confluence area that we mentioned, and sellers got invalidated by their 0.786 on the trend-based fib, right? So we have potential bull flag structure. Break and retest obviously is like the key thing. This could just be the break and then wait for the retest and go. But for me, I am staying in this trade because particularly I'm targeting these two inefficiencies. We have this one here from the high down to here, but it gets retested. So there's like a little bit at the top, just a little bit. I wouldn't call it an inefficiency though, since it was made a lower high, but just like a key area. So keeping that in mind. And then on the lower high after the B wave, we have this candle. And the inefficiency here is pretty obvious. We have there to there. And that's pretty much it. I know that once we clear that, we're gonna get going with momentum. And that's like that 516 to 2 whatever, so 218 is the key level. That open in particular. Sometimes I go candle body, sometimes I don't, so I'm just gonna mark that candle body. Undo. I'm just gonna mark that candle body. And that's that. And yeah, if anything, what I will do is I'll just do a refresher at the end of this trade and see what we get going. But as far as intraday, it looks good. And the reason why I took this trade We can go to the S&P 500. We have our inefficiencies here. This is a rally off the lows yesterday. We swept it on SPY, but we didn't sweep it on here. In fact, higher low, higher low, higher low. So in order to maintain trend, we want to keep that higher low today. So that's one thing I'm thinking of. And the inefficiencies, I don't mind going for the long. I prefer above both. NASDAQ, I talked about this in the community. We've been below the inefficiencies. So there's a big possibility that we could have had accumulation there yesterday at the lows on Monday session. So that's just what I'm thinking about. And we also have this megaphone too. We could re-exit out the megaphone and try to confirm over these. So that's why I was like, you know what? I'm looking for something that will give me a nice little edge out of if the inefficiencies want to be reclaimed. And I saw that in Apple. And so far, so good with the trade. I mean, on the 5 minute, it's looking pretty good. We're coming into that key level right now, so I want to see a break and retest above this. Hold of 216 and 217s are going to hit. I actually did buy calls, out the money calls for 217.50, and I think we do rip through this previous high. If this ABC structure is complete and it's wave 3, we rip through the high, and then the market does see any other weakness, like before the PCE, then maybe another chance to get a higher low, inverse head and shoulder situation, or the flag just goes off of PCE and then we break that high and run. So that's why I was looking at those contracts, and that's why that is that. So I hope you all learned something today, particularly those 30-minute inefficiencies. I could even go back on here, zoom in just quickly to show you how these are derived. Back test here. This was the run up on Monday the 20 or the 17th, and then we similarly do that in between them. And as you see, I would do wick to like candle body, and then wick to candle body. Yeah, and that's pretty much it. All right, later.